Boys and girls, what up? J Trades Universe is your boy J Trades. So, guys, we're off to the next pair, which is going to be an interesting and a very short analysis, right? So, what we are analyzing is we are analyzing the pound to the dollar, right? This is my biggest favorite pair. This is actually one of my prime great pairs. So whenever I analyze this pair, I'm actually looking for confluences. I'm looking for multiple rejection because of what it likes doing. It likes playing in certain areas, giving us the kind of information that we want. So whenever we enter the market, we enter the market with so much confidence, with so much oomph, with so much zeal, with so much urge, right? So let's just delve into it, right? So I'm just going to do a quick analysis and just tell you that the structural bias of the market, if we can all have a look at the structural bias of the market, we can see that the market has been pushing towards the downside, right? So previously on my previous video, I said the low. I kept saying the low. So guys, pardon me because of that. I just was caught in the moment. So you can see here that the market, I think at the beginning of August, right, the market started giving us sideways moving, right? The market started pushing towards the low, pushing towards the high, pushing towards the low, retesting the high, you know what I mean? Not breaking structure, just creating lows and highs at the same psychological key levels, right? Then the market started to push towards the low consistently, and we can see here the market created a lower low, resisted the high, the previous structural high. If you guys can look at this previous structural high here, the market did respect this position for quite a minute, right? So now if we delve in deeper into what the market started pushing and doing, right, then the market started to create a low, the market retested the high, the market pushed to created the low, the market pushed to create a high, the market started pushing. But you could see here that the market likes pushing and creating an expanding channel. So you have a contracting channel where the diagonal resistance and the diagonal support actually, what they do is they're closing off, and you have a market that actually expands, right? So the market will actually do something like this. You have the market actually creating a channel like this. Let's clone this. Let's clone this. So we're looking for an expanding channel. So this will be an expanding channel, and what the market will do is the market will be playing within this channel, creating, zigzags like this, depending on when it breaks the channel, to which movement is the market gonna go with, right? So now if we delve in deeper into the market, we could see here that the market has actually created a diagonal support level and a diagonal resistance level, because of what I've learned over time is that, after studying my after studying using so many of them, the free online courses that the FX Goat has released. Yes, guys, FX Goat, go follow the guys. They quite dope, right? So follow Swag Academy, follow Lisiba Mutupi, follow. So in essay, let's start it like this, right? In essay, follow FX Goat, number one. Follow Vusimax, but Vusimax is now much more focused into people who are trading indices. So if you're a Nasdaq trader, if you're a German, if you're a German 30 trader or US 30 trader, then you can actually follow the bro because of he's quite dope doing things that need to be done. Getting cash, or is it a long story? That's what they normally say, right? So let's delve in deeper into what's happening with this structural bias of the market. As you can see here in the current market position, right, this is where I want us to normally focus on, right? And as you guys can see that I'm actually analyzing the daily time frame, because of I'm actually looking for the overall structure of the market. What has the market been doing in the past 5 months? What has the market been doing in the past 6 months? What are we looking at? What is the market looking like futuristically? What are some of the confluences that I'm actually anticipating for me to make a decision whether the market is going to be buying or selling? And if the market buys, right, what are some of the triggers that I'm going to be looking at? You have to learn as a trader to be able to read candlesticks, right? I'm a candlesticks reader, and I read candlesticks very I'm consistent in reading my trading my candlesticks, but I read the candlesticks that actually matter. I don't read all the candlesticks, right? If I'm reading a candlestick and it's not in a psychological key level, how is that going to assist me? How is that going to help um uh, 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 me make a decision? If a candlestick is just in the midst of just a market that's flowing, it's just a normal candlestick. But if a candlestick in a 1 hour time frame is actually occurring in a psychological key level, then I'm reading that candlestick, I'm zoning into that candlestick, right, and reading more about it, right? So now let's delve in deeper into the 240 minutes time frame. Now we get the overlay of the structure, which is a structural bias towards the downside, right? Which is the market has been creating and respecting its lows and lower highs, right? But now what we see here, as you can see here, I've marked a major support marked a major support area, right? Because of what the market does is create a zone. Guys, it's not that the market is going to create some sort of a level like this and come and retest this level and push towards that direction, or break and push towards it's gonna play. So it's a zone, right? So it can be either between 10 to 13 or 10 to 30 or 10 to 40 pips, and the market can be playing there for some time. Other traders who are really knowledgeable, who are really skilled, can actually make scalping can actually recognize scalping opportunities in that condition, the market condition. So what I'm looking at, guys, I was looking for in the hourly structure. What I was looking at the breakout structure. As you could see here, that um the market did push towards this level here, created some sort of a nice support level, pushed towards the high, came back, but didn't actually give us a resistance that we wanted. Then the market shot towards the upside. So some would say this is a double bottom, right? It's a double bottom, but it's kind of like a vertical or an adjacent or a diagonal double bottom. But for us, it's not really convincing, because of the market actually has to come and retest this level, or play just around the level, maybe break it, or just through a stop hunt, or you know what I mean, those kind of things that the brokers like to do, right? But from what I'm looking at, the market didn't really come here and retest the level that we actually wanted, or we were anticipating for the market to kind of come and retest. But the market it did shoot up, then push towards the low now, and where the market is stuck now, it's a really interesting level. As you could see that the market has actually been respecting this level. So we were anticipating that the market is going to create some form of other internal channels and maybe break those channels, but we're looking for a retest of the structure. So what we're looking at, or what we're anticipating the market will do, and is we're looking for the market to do something like this, then give us the bulls, right? So we're looking for the movement towards the low, right? So we actually anticipating breakout structure, but the market has to come either retest the major support level that it has created, or retest any level from here. Then if the market does come back to these previous low areas, what we will be actually anticipating is buying the market and actually pushing our stop loss just beneath where the market just beneath the support levels, right? So anywhere between this, I'll be actually anticipating looking at the market that is giving me the kind of confluences that I need for me to enter the market and actually push my buys. But what I've seen happen is that the market can come into those areas, but not actually give us the kind of confluences and give us the kind of triggers that we want for us to enter the market. So it's normally advisable for anybody who's trading this market actually to also exercise patience, create your buy orders, create your buy orders or your sell orders in the areas that will actually be able to give you some form of edge over the market. Don't enter the market when the market is still playing near those lows areas that we are anticipating that the market is going to push. But should the market not go with our analysis, right? Should the market not go and follow, because of, remember guys, we actually follow the market, we follow the trend, we follow the actual market, we follow the pressures, we follow them, what the market is giving us, right? We will be anticipating anything, right? If the market's gonna break towards the low, then we want the market to either retest this previous structure here, and now we'll be actually looking at entering the market towards the low, right? But because of the market is actually in a structural downtrend, we can say that if I am selling, then I'm not going to be selling and holding for long. I'm going to sell, but I'm going to make sure that I sell, and once I get in profit, I move my stop loss into profit, right? And so that, you know what I mean, I as the market can tend to reverse, I don't lose no money. Thank you guys for tuning into the video, J Trace Universe. Remember to click the subscription the subscription button. So sorry guys, I'm speaking so quick. But to click the subscription button, follow my page, comment, you know what I mean, it helps push the algorithm, it helps push, the eyeballs towards most people, so most people can actually access, most people can actually join, most people can actually be helped and profit, and profit in the market, right? So it doesn't matter which broker, as I close off, it doesn't matter which broker you actually use to trade any financial instrument. As long as that broker is regulated, as long as that broker has some form of regulation, as long as that broker is not greedy when it comes to spread, as long as that broker doesn't comply, if it's a local broker, complies with the FSCA, and you actually are aware of what's happening in the back end of the broker, stay updated, you know what I mean. I don't normally advise people to trade using local brokers, but if you are trading using a local broker, then it's also okay, right? But please exercise precaution. It's your boy J Trace Universe signing out. Boom, I'm out.